We cross now to Nairobi for our Kenya market update, and joining me is William Odhiambo, who is managing consultant at Elim Consulting. Good morning, William. National Bank of Kenya is perhaps our headline story this morning. It was the top gainer on the exchange yesterday, and it closed with a deficit of demand of over 40,000 shares. But it's not just the National Bank of Kenya. Bank profits have hit 100 billion shillings. High rates are boosting those lenders, and the banks are looking like the dominant sector at the moment.
Yes, indeed. Good morning, Williams. Of course, as you said, the banking sector in Kenya is quite dominant at the moment. We are seeing the banking sector shrugging off each and every barrier that comes their way. And National Bank of Kenya has proved itself to be a bank to reckon with, from a second-grade player to a first-grade player today. And so, as of now, as investors expect the profits to be announced, it looks like National Bank of Kenya took the biggest chunk of the pie.
Right, and to what extent are investors moving into this sector? Have they realized this? Because there have been profit warnings in other sectors. And then, of course, there's the inflation environment, the interest rate environment. What are we expecting for the bank sector, given what is likely among those indicators and measures?
Well, like I said, the banking sector in Kenya has been strong, and every time there are challenges like high inflation or high interest rates, they have managed to shrug off those challenges and still deliver good profits to their investors. And so, while the other sectors have also given profit warnings, the banking sector is something. It's one big chunk of a pie. You do not want to let it go. So investors are still keen on getting the benefits from the banking sector.
We were discussing last week, William, that some of the banks have moved their interest rates, particularly the smaller banks, have shifted their interest rates, whereas the bigger banks haven't. And that's not the case in South Africa, for example, where whenever the central bank sets a new repo rate, as we call it, all the banks move in unison. It's almost as if they are being directed by the same hand, and then they move by exactly the same amount. What that suggests in Kenya is that there's more competition there, and therefore perhaps even more interest for investors.
Yes, what we have is oligopolistic tendencies where banks collude and they agree, gentlemen, I think we can make more money with the current situation, and then when the circumstances change, that is when they choose to go down, when it suits them. And so as of now, of course, they are making a kill out of it because really the market is, the demand for money is still there, and they are still lending money at very high rates. The smaller banks are offering lower rates simply to beat competition, but the bigger banks still have demand, and they are still making money.
Interesting that in theory the market should adjust to that, but you've explained perhaps why it doesn't. Lots of foreign demand for Kenyan stocks at the moment.
Well, indeed. Our stock market is attractive. Our year-to-date last year was quite good, and everyone is looking at Nairobi Stock Exchange. But beyond that, there have been indications that the shares or the counters at the stock market are going to perform very well. And so this has attracted international investors into the country to be part of those gains.
And let's look at a couple of the big companies that traded heavily yesterday. Safaricom, we speak on that most days of the show. Mumias Sugar and KCB. What's behind the interest in those particularly?
Well, the demand for these essentially, I would say, is being driven by foreign interests. You'd understand that mostly when the foreigners come into the securities market, they are looking at the big names and the blue chips, as it were. And Safaricom and KCB ordinarily stands out. So this is one of the reasons as to why there is a keen interest and high demand for these counters. The other part of it is that there are a few of them, or some of them, that are expected to announce their their profit results in the next few months. And so this has also drawn interest.
Yes, and as we've said earlier, some companies are announcing results a little bit early to take account of the elections. Now, what's interesting here is that the Nairobi Securities Exchange, the NSE, is itself listing. And it'll be interesting to see what the revenue model for that is, because other exchanges, certainly the JSE in Johannesburg, their revenue as a listed entity, where they've listed themselves on themselves, if you see what I mean, their revenue as a listed entity depends on activity. So if there's a lot of volatility, a lot of trading, they make more money. Is that how the Kenyan exchange will work? And of course, there's less activity on that exchange.
Well, indeed, the revenue for the Securities Exchange has been one activity from the member brokers, but also in terms of the number of players that are in the market will also generate revenue. For instance, if there is a trader or if there is someone who sells information, or several players will generate revenue for the stock market. So we are looking at the same structure as it is in South Africa, and it's an interesting observation to see Nairobi Securities Exchange list at the Nairobi Securities Exchange.
That's right. It does sound funny, doesn't it? And then finally, the coffee prices at the last auction. I know Kenya is not a huge grower of coffee compared to some of the others like Brazil and Vietnam, but in the East African economies of the region and Kenya, how important is coffee in relation to, for example, tea, which is perhaps better known as the big export?
Well, coffee is still significant. It's significant in Kenya, it's significant in Ethiopia, Uganda. And the Kenyan coffee is unique because mostly it's used for blending the other coffees. And there is a keen interest for the Kenyan coffee internationally. And so you see that the prices tend to rise year on year because of this high demand. So it is still significant to the Kenyan economy because we still grow a lot of coffee, much as it's still lower than the bigger players, but there is still a lot of significance on coffee in the Kenyan economy.